On this episode, we're going to dive in the best way to quickly analyze a business that you're looking to acquire. And you obviously want to probably get financing. So how do you go about figuring out if this business will be financeable with SBA? And I think the easiest way is to work with a great business acquisition type of lender. They understand the ins and outs of the business acquisition process. So when you're first looking at a business to acquire, the first thing you're going to want to do is get 3 years of the business's financials, not just their profit and losses. You're going to want to get 3 years of their business tax returns and interim, year-to-date interims. So, for example, we've got 2021, 2022, 2023. Right now, they could have filed an extension, so you're going to want to get year-to-date or end-of-the-year profit and loss and a balance sheet. And then we're already in Q1 of, or past Q1 of 2024, you're going to want to get interims for 2024, year to date, wherever they're at. So you want to grab those financials first. We're going to basically, at this point, you're going to have an understanding of what kind of purchase price the business will be. You're going to have research the business. It's something you're interested in pursuing and investing into. So now we have the financials. Now we can spread the financials. We're not going to go just off year to date. We're going to do a 2-year average and spread those financials. And we're looking to see will that cash flow debt service our new loan proceeds with our SBA 7A loan. And if not, then we come back with some structuring ideas. Sometimes we can get the seller to carry back a seller carry note on full standby, which means if no payments due for the first 2 years, it can accrue interest. But then we can take it out of the debt coverage ratio. So we can help the seller get what they want, the buyer get what they want, and meet in the middle with some kind of favorable terms for all parties involved. So, and the differences too is industries and sectors. Some banks will do certain deals that other banks won't. So understanding which banks will do what. For example, if there's no collateral, there's a collateral shortfall, and let's say it's a large collateral shortfall, a couple $1 million. And let's just say the borrower doesn't have that much real estate collateral. Because remember, anytime there's a collateral shortfall, the bank will look for additional collateral. It's an SBA guideline. When the loan amount is over $500,000, under $500,000, that guideline doesn't apply. So let's just say the borrower did not have any additional collateral, but the business was extremely strong and the buyer had compensating factors. They had good credit, or he or she had good credit. They had some cash reserves. They had some industry experience. So there are banks that will do $5 million, what we call airball deals. So it's possible to get these structured. Now, not every bank will do that deal. Some banks carve out niches in different industries and are better. Some banks say, hey, I won't look at any hospitality. Some banks say, yeah, we love hospitality. Some banks will look at airball deals. Some banks won't. Some banks will just look at SBA loans when there's a commercial real estate component involved in the transaction. That's all they would do. They don't do any franchise deals with no collateral. They don't do any business acquisitions with no collateral. All they'll do is SBA 7A loans and 504 loans with collateral. So navigating this fragmented market segment in SBA is very challenging. Plus, you add in the fact that the SBA is constantly updating their guidelines and changing. They're always trying to improve, but sometimes they make changes that don't improve the process. I would say lately, they've been very generous in what they're doing. There's a lot of fantastic opportunities. You can now do partial buyouts. So you could find a business, the seller wants to stay involved, but they're going to take a lot less ownership position. Let's say they take 15% ownership. You come in, get the financing, they stay in and leave a little bit of their equity in the deal, and they don't need to be a guarantor because they own less than 20%. So that is a new rule. So there's a lot of positive changes happening, and it's just really a component of learning how to structure these deals, because some banks are extremely conservative, and some are more aggressive. And when we look at a deal in the beginning, we can usually tell, do we have to take this deal to an aggressive bank, or can we take it to a conservative bank? And then we also want to say, well, who's going to give us the best leverage? who's going to give us the best margin. Is this a better deal for a 7A or a 504 if there's real estate involved? This is all part of the navigation process. Is this deal a larger deal? It's a $10 million acquisition price, no collateral. Well, we need to figure this deal out. So maybe we take it to a bank that will do a pari passu deal where they'll do a $5 million 7A with a conventional piece of maybe $2.5 million. So we can do larger deals with the SBA with a bank that will do these conventional pieces alongside. So there's lots of opportunities out there within SBA. It's just really a process of navigating and also understanding when there's a lot of moving parts, it takes a lot to get the deal done. There's a lot, like in the beginning, for example, if it's like a boutique motel and the business, it's been owned by the same seller for 80 years and their financials are a little weak because they've been kind of just getting by because they haven't put money into the property and the business. So those type of deals, if we look at the cash flow today, would never cash flow. But we've got a buyer that's coming in, is going to do a bunch of renovations, is going to increase ADR, average daily rate, and increase occupancy levels. It's going to start marketing online using the different booking portals. And now we have lenders that will use projections. They like you on these projection-based deals. If there's collateral involved, it's a lot easier to do. So this boutique motel would never cash flow with today's financials. But with our plan and our improvements, our projections, the DSCR coverage is 1.25 or greater. We can get those deals done most of the time. So, but it's also telling the story. Well, the borrower lives 5 hours from the subject motel. Well, how are they going to run it? Well, they're going to run it this way. They have their brother's an hour away. They're going to pay him to come to the property 3 or 4 times per month. They're going to automate the check-in process. They have experience. They own short-term rentals. Okay, now we're painting a picture to try to get the deal done.
Hi, this is Bo Eckstein, host of the Investor Financing Podcast. Are you a real estate investor with properties and you're trying to figure out how to refinance or grow your existing real estate business? Need some clarity and a game plan for moving forward? I'm offering a free strategy call where we dive deep on your real estate investing goals. I'll help you come up with a strategic finance plan that will help you get to where you want to go. Whether you've got a portfolio of 30 properties or you're starting out with your first property, I have a framework that has helped many investors grow. If you're interested, book a call below in the Calendly link.
So anyways, SBA is a complex process. It's a lot of paperwork, but at the end of the day, it is the best product out there for business acquisition, for franchises. If you're a business owner and been paying rent and want to go buy a building, as long as you're occupying 51%, you can use an SBA product and get up to 100% financing. If you're a franchise owner and you have an existing territory and you're crushing it, and now you want to go to location 2, well, there's some lenders that will do 100% financing on expansion, even without collateral. Not all of them will, but it's telling the story and figuring out the right bank to go to. And that's what we do here at my company. We help you navigate the whole process, figure it out, get a game plan, and get you closed. So anyways, go to bookwithbo.com to schedule a 15-minute discovery call with me. We can talk all things franchising, business acquisition, and financing specific to SBA. And we also do a little bit of commercial lending and work with a lot of real estate investors. So go to bookwithbo.com. Hope you enjoyed this episode, and we'll see you soon. Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.